And then after that, gold just says, sayonara, I've had my 10-year bull run. It's time for the U.S. equities to shine.
We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers.
Okay, guys, welcome back to this episode of Talking Trades. Thanks for joining us. Myself, Kevin Wadsworth, and my friend and colleague, Patrick Karim. We're here to bust some myths, and we're here to talk about gold and how you can identify when gold is reaching its low point in a cycle and when gold is reaching the peak of a bull market. How do we know, using our charts and our technical analysis, when that's happening? Pat, what do you have for us?
Thanks, Kevin. Well, look, there's like a myth out there that gold moves inversely to U.S. stocks, right? That gold loves it. It's a risk off, and gold goes up when the stock market goes down, and gold cannot go up when the stock market goes up. But we'll show you with charts that is not quite what happens, right? There are periods where, yes, the U.S. markets, when they start going down, they'll drag gold down a little bit with it. But then after that, gold sniffs out the required destruction of purchasing power to lift the U.S. equities back up, and gold loves that. So it's going to start going up, up, up. And but when does gold peak, right? Because gold after that is just keeps going up and up. And then after that, you think it's going to keep going up forever. But there's a point, a threshold, where when the U.S. equities just start a new bull run, right? Once they fully recovered from their bear market, then the capital flows, like they just start going back more heavily in the U.S. stocks. And then after that, gold just says, sayonara, I've had my 10-year bull run. It's time for the U.S. equities to shine. So what's the best way to demonstrate this, guys, is through visuals, through a chart. And what I'm prepared for you guys today is I'm just going to share you I'm going to do it interactive with you. I've done tons of these, but I'll show you the process right now. So here I have the gold chart, guys. It's on the monthly. Log scale, of course, because if I put on linear scale, you'll see that you can't draw anything here. It's tight and it's disproportionate. So I'm just going to put it back on the log scale. So here's gold. But what happens with gold with US equities? So right here, my bottom pane, guys, I have the SPX. How do both of these interact, right? So let's look at a bear market in US equities first. I'm going to maximize this. So I'm going to zoom in. Let's say I'll start here, even with the 1960s bull run. Who remembers this? The Nifty 50. There's a whole bunch of everything could do no wrong. So right here, we got a crazy bull run for the US stocks all the way up. Crazy, crazy long-term bull run. And after that, you've had some breaks along the way, but here we're starting to really have more meaningful breaks. US stocks do a melt up back test of this longer term rising trend line. But then after that, it just goes sideways pretty much here. Like there was a breakdown here again and just goes sideways. The question you must ask yourself is, when do the US stocks resume their secular bull run, right? And that's when gold, silver are practically going to top it. It's when do the US stocks really start showing the evidence that they have done through the worst of it and then going back up. So you can see pretty much here, you have this nice pivot line, resistance, support, resistance. Oh, above, now testing it, and off it goes, back test. But right here, you were already doing higher highs, higher lows. You're already starting an uptrend, right? And that flat plane here, all that zone here, that's telling you that the bearish evidence, the basing pattern is gone. So this is key, understanding when US stocks resume their uptrends. Because look, bam, look what happened to gold at that precise moment. It was the top for gold. Gold went down, US equities went up, and that was the end of the bull era. But I'll show you one thing here. I'll overlay both together. You'll see that gold loves recovery of the US stocks. See how the US stocks here were going back up? Look at gold. It went up together with the US stocks. Gold doesn't necessarily love when US stocks go down. It can do it. In the 70s, there were periods where gold just kept going up while the US stocks were going down. But these deflation events, or these deflation periods where destruction of purchasing power is less, right? Because deflation implies that the US dollar is gaining strength. There's less and less dollars running around. There's deflating US dollar supply running around the same amount of goods. Let's bring it back to the 2000.com bubble, guys. Right there. US equities right here, rising trend line, failed. US equities here, they fall apart, right? A little topping, rising trend line, try to go back above. fell again. After that, a rising trend line, but it did not fail. And guess what happened after that? And that's exactly where gold peaked its run, guys. So gold likes US equities going up, but the instigator of a gold bull era is when US equities start tumbling down. So you'll see here, I'm going to squish it down. When US equities here started falling over, the bottom for gold was there. And that you'll see that in the ratio charts of gold starting to break out versus SPX. Gold goes on up on a run. US equities tumble. US equities rally. Gold still goes up. All this area here, it's not a bull era yet for US equities because gold is still going up. It's still outperforming it. And guess what happened? That set up for next tumble. Then the next tumble took down gold a little bit, right? The GFC crisis. But after that, gold recovered before US equities and kept going up with US equities, alongside US equities. So you'll see most of gold's bull runs are alongside US equities going up. But it's not a US equity bull era. It's a US equity bear market rally, or just a recovery phrase, right? If the 2008 crisis would have not failed and would have continued upwards, that could have been the end for the bull run there. And as we've seen in the 1970s run that ended in 1980, but it just failed, and just we continued right here until, look at that. That was just a beautiful breakout above this pivot line right here, even beautiful double bottom, and then continuation up for US equities. And there, gold, that was the top for gold. So you have to see gold as not an anti-US equities play, but more as a capital rotation play. So when you see US equities starting to roll over, then gold start outperforming US equities, then you got something going. Then you know you're entering a golden bull era. Silver, the miners, all that stuff's going to have more tailwinds instead of headwinds, guys. So keep an eye on that. And remember, gold will peak once the US recovery, the 10-year bear market, whatever it has, once that ends, that's when gold peaks. But we're not quite there yet, guys.
Fantastic stuff, Pat. Thanks for that. And thanks for joining us for this episode of Talking Trades. Don't forget to subscribe for more content and join us again next week.